Welcome to Pivot to Power, the podcast where we decode how real world businesses navigate complexity, crisis, and competition. I'm your host, Netmi, and today we're diving deep into the strategic evolution of Laugfs Power PLC, one of Sri Lanka's most resilient renewable energy companies. So, Laugfs Power Limited was founded in 2006 as a subsidiary of Laugfs Gas PLC, and they focus solely on renewable energy. So, they started small with a mini hydro power plant and expanded by acquiring solar and hydro subsidiaries. And today, it operates over 23 megawatts of clean energy capacity with ongoing projects to grow further. So, actually, they have the largest solar farm in Sri Lanka and one of the most significant contributors to renewable energy in the country. So they were listed in the Colombo Stock Exchange in 2019, which is when they truly established themselves as a key player in Sri Lanka's renewable energy industry. So let's start with the company's compass, right? Love's Power's vision and mission aligns with the group vision and mission. The vision is to become the most preferred and trusted conglomerate in Sri Lanka, expanding across borders and touching everyday lives. And their mission is to lead in every market segment they enter, delivering innovation, stakeholder value, and responsible corporate citizenship. So it isn't just branding, right? It's a strategic anchor. Their direction aligns tightly with Sri Lanka's national goal of sourcing 70% of electricity from renewables by 2030. Love's Power isn't content being a passive player. They're positioning as one of the main key proponents in the country's energy transformation. Okay, firstly, let's take a quick look at the numbers. And you see this data table here. For those listening and unable to see the screen, um, basically there's a pretty big elephant in the boardroom. Okay, so in 2021, there is a staggering 902.8 million rupee net loss. That's right. And of course, in 2022-2023, they have managed to reduce the loss to 113.6 rupee million net loss. And finally, making a recovery in 2023-2024 with a profit of 51.98 million. And just to recap the other numbers for the benefit of those listening, we can see that the EPS was negative 2.33 in 2021-2022, and it has come to a positive 0.13 in 2024. Gross profit margin has gone from minus 67% in 2021-2022 to 65% in 23-24. And then what else? EBITDA margin has gone from a negative 75% to a positive 76% over the 4 years. And of course, the net profit margin has gone from a staggering minus 88% to finally a 5% in 2024. So, what happened? Well, for one, Laugfs had to write down several solar and hydro assets amid macroeconomic instability and currency depreciation. Okay. Then the Ceylon Electricity Board, or the CEB, delayed payments, and this choked Laugfs' cash flow. Thirdly, interest rate surges across the country made debt servicing way more expensive. And at the same time, the Sri Lankan rupee's sharp depreciation inflated the cost of components from overseas. So basically, they had a massive increase in cost. And finally, although revenue stayed above 1 billion or close to it, Inflation and maintenance costs squeezed margins. In other words, it wasn't a bad year or bad quarter because of poor management or something similar. It was more the result of a systemic shock, right? Forcing Laughs power to rethink everything, to rethink their strategy. Well, for one, um, they wrote down several solar and hydro assets amid macroeconomic instability and currency depreciation, right? Then the Ceylon Electricity Board, CEB, delayed payments, and this choked their cash flows. Thirdly, interest rates surged, and this made debt servicing way more expensive. Next, the Sri Lankan rupee's sharp depreciation inflated imported component costs by a pretty big extent, thereby increasing their overall costs. And finally, although their revenue managed to stay above 1 billion rupees, inflation and maintenance costs squeezed their margins. So it wasn't a bad quarter because, or bad year, or bad 2 years because of poor management or something similar like that. It was more of a systemic shock, an external shock mostly. So this forced Laughs to rethink everything. So how did they make their grand comeback? Right? How did they bring their loss into a profit within 3 to 4 years? Firstly, they paused non-essential capital expenditure. So they had plans to expand in Bangladesh and Africa, and they didn't. They stopped it. Then they focused on maximizing output from existing plants, especially hydro. So hydro saw a 31% increase in 2023-2024 thanks to improved rainfall and better maintenance. Then they renegotiated payment terms with CEB and accelerated collections, which improved their cash flow management drastically. They also did something called carbon credit monetization, where basically there's something called verified emission reductions, right? So they accelerated verification and sale of these verified emission reductions, or VERs for short. They sold about 21,100 by 2023-2024, creating a new revenue stream and enhancing sustainability credentials. Finally, they established dedicated board committees for risk, audit, and nominations, strengthening oversight and aligning risk management with ISO 31000 standards. Okay, so let's go back to the numbers, right? Um, their revenue remained steady, but profitability shifted dramatically from a near billion rupee loss in 2021 to 2 to a 52 million profit in 2023-2024, which is pretty astounding, I must say. Then the additional financial health indicators revealed that return on equity improved to about 2.6% in 2023-2024, reflecting a return to positive shareholder profitability. Debt to equity ratio improved to roughly 1.19, showing effective deleveraging from prior years. And finally, steady growth and EBITDA margins underscore the company's operational resilience despite external shocks. So, what exactly shaped the strategic environment for Laughs Power PLC? So, when we're looking at external factors, we can use the PESEL model. Political and economic volatility, including inflation and currency fluctuations, had an impact. Then, rising social demand for clean energy and corporate sustainability had an impact. Technological advances in solar, wind, and emerging waste to energy solutions has an impact. And finally, legal and environment compliance pressures, including being compliant with ISO 31000 and the UN SDG 7 alignment, definitely plays a part in shaping their strategy, right? If we were to also look at their internal capabilities, that sets them apart, that sets their strategy apart, and makes them more competitive. We can take the RIO model, VRIO. Um, when it comes to being valuable or giving something valuable, they have the largest solar power capacity in Sri Lanka. Then, when it comes to RARE, they were an early mover in carbon credit monetization under the gold standard, and they made it a new revenue channel for themselves. Then, inimitable, which means they're offering something unique, right? What do they offer that's unique? So, they have skilled in house engineering and maintenance teams. And finally, organization, right? They have strong governance frameworks, good enterprise risk management, and board oversight. And it helps that they have a very large conglomerate group to help them out. Laughs Power has pursued a clear differentiation strategy focusing on value rather than cost leadership. Okay, that's the part that they've taken. By monetizing gold standard carbon credits, they began turning sustainability into tangible revenue. They undertook geographic diversification, for example, solar in Hambantota, hydro in Ginigathena, and wind power projects in Mana. Then they implemented vertical integration, managing generation, maintenance, and R&D internally, reducing costs and improving reliability. And finally, they began innovating, for instance, by exploring battery storage and waste to energy methods, staying ahead in renewables. So, this strategic positioning builds sustainable competitive advantage, particularly in a market increasingly sensitive to ESG credentials. ESG meaning environment, social, and governance. So, we can see how impactful their execution has been by looking at their financial data and other data. So, for instance, their liabilities reduced from 3 billion to 2.35 billion over 3 years. Yeah. Then equity improved from 1.93 billion to 1.98 billion. Their net asset value per share rose modestly from 4.99 to rupees 512. 5.12, right? And their governance strengthened by being ISO aligned, having good risk management standards and newly formed board committees. Then their operational control enhanced by bringing engineering, maintenance, and R&D in house. And the organizational structure supports agility and transparency, enabling timely decision making that aligned with their strategy. So all of these things is a result or is indicative or shows how good their execution or the strategy execution has been and how in alignment they are with their vision and mission. So, as we all know, culture, ESG, leadership, all of these things play a very important role in great strategy execution. So, Laugh sought to embed ESG principles in its culture, fully aligning their operations with the SDG 7 goal, which is affordable and clean energy. Then they secured gold standard carbon credits, converting sustainability to financial value. They invested in continuous training and international certifications for their engineers. They maintained a low attrition rate and a strong safety record. And they have, so when it comes to leadership, their chairman, Dr. Vegapitia, and their group CEO, Piyadasa Kudabalage, who is now actually retired, I think, has balanced entrepreneurial vision and financial discipline, which is key during economic uncertainty. With any good case study comes good takeaways. Now, with Laughs Power PLC, what we saw is good strategic alignment for one. They integrated their vision with the national energy policy and needs of the world, which helped them make a strong impact. Then, sometimes taking big decisions like pausing expansion to optimize assets, recover cash flow, and rationalize costs is more important than following fairy tales of growth. This is to do with resilience and sequencing. They also used sustainability as a competitive advantage by taking ESG initiatives into new revenue streams and not just costs. And they also exhibited strong governance maturity, where with board restructuring, ISO risk frameworks, and active committees signal disciplined long-term thinking. And finally, having financial discipline and financial prowess, such as maintaining strong gross and EBITDA margins and improving leverage, can be a strategic game changer, especially especially in times of trouble. So, closing thoughts. Laughs Power's journey is basically a masterclass in strategic resilience and renewal, right? They didn't just survive a crisis, they evolved by turning chaos into clarity and clarity into decisive action, right? So, for MBA students like me and you, maybe, for strategists, for energy enthusiasts, this is a great blueprint on how vision, data, and disciplined execution can transform a company and power a nation's green future at the same time, right? And basically help you pivot to power and get you out of any sort of crisis. And with that, we've come to the close of our first episode on Pivot to Power. Join us again to learn more about how companies have overcome challenges over the years. Thank you, and this is Netmi signing off.